South Africa's rand extended losses against the dollar to 1.5% on Tuesday. The currency fell to a new 13-year low as emerging market currencies tumbled on heightened expectations that U.S. interest rates could rise by mid-year. We look at the impact as well as which other currencies are on the receiving end. It is time for Global Business. Hello and thank you for joining us. I am Penny Nakaribe, live from the Kenyan capital in Nairobi. Also coming up this half hour, South African flag carrier opts for job cuts to stay in the air. And Zimbabwe begins monthly repayments as it seeks a place in the IMF's good books. Let's begin in South Africa, where the rand dropped to a new 13-year low against the dollar on Tuesday. The currency extended recent losses as investors continued to chase the U.S. currency and sentiment towards domestic growth prospects remained downbeat. By Tuesday afternoon, the rand was at 12.27 to the greenback, edging closer to the 13.84 level last reached in March 2001. The rand has lost more than 7% since February as the U.S. dollar firmed on economic indicators, affirming market bets of an upcoming rate hike. Even Standard & Poor's comments late on Monday couldn't lift the currency. The ratings agency said the country wasn't likely to be downgraded in the next 24 months. It has a BBB- credit status, but it seems traders are more focused on the underlying economic weaknesses, including the electricity crisis, labor unrest, and current account deficit. Here in East Africa, the Ugandan shilling weakened to a new all-time low on Tuesday, crossing a key psychological point as demand from energy sector firms and commercial banks waned. Official figures from the country's central bank indicate that the shilling closed at 3,002 against the US dollar, the 30.02 to the US dollar. That's the lowest in the history of the currency. CCTV's Michael Balake with that report.
In the history of Uganda, the currency had never before hit the 3,000 mark against the US dollar. Financial experts attribute this new low to several domestic factors, like the growing trade imbalance. The East African country's import bill has continued to rise on the account of several public infrastructure projects. The recovering of U.S. economy and strengthening global economy have also partly contributed to a weakening shilling. Locally based financial analysts also warn the falling shilling has itself added to uncertainty and increased speculation against it. They also cite a low supply of foreign exchange inflows in the economy, partly caused by high demand for US dollars locally. The central bank is yet to intervene, with analysts suggesting it is likely to let the local currency find its own level. Michael Baleke, CCTV, Kampala.
All right, so let's take you back to South Africa, where the rand dropped to a new 13-year low against the dollar on Tuesday. It extended recent losses as investors continue to chase the U.S. currency and sentiment towards domestic growth prospects remain downbeat. Sumitra Naidu is now live for us in Johannesburg for more on this. So, Sumitra, for 2 consecutive days, the rand has touched new lows. What factors are driving it on this downward spiral?
Well, Penina, the rand slide started last week after U.S. jobs data came in positive. The data revealed U.S. employers added 129,000 jobs in February. That figure came in higher than expected. And even though unemployment also rose in the U.S., the markets chose to go with the positive number, which lifted the dollar and added to concerns of a rate hike in the United States. But as you said, in the last 2 days, we've seen significant weakening in the currency. Today, the rand slumped to 13-year lows against the dollar, and that weakness is still being driven by concerns around the pending hike in U.S. rates. So the rand took a hit along with other emerging market currencies. There was also some weak factory data out from China this morning that added to that slump. But the real fear right now is not about a rate hike in the U.S. That's certain. The worry is by how much the U.S. Fed Reserve will hike rates and the impact thereof for emerging markets.
So Sumitra, are we expecting the Reserve Bank to react to this downward trend?
Well, the Reserve Bank has always maintained its non-interference in the currency, but it is, of course, keeping close tabs on the rand's movements. The bank did say at its Monetary Policy Committee meeting in January that it was concerned about the exchange rate and also forecast a weak rand for much of 2015, largely as a result of that expected rate move in the United States. The bank said rand weakness posed an upside risk to the inflation outlook, and the currency was vulnerable to the pace and extent of monetary policy normalization in the US. It is unlikely that the Reserve Bank will act to stop the currency from weakening further. It's more likely to hike rates in the coming months, as this weakness will no doubt erode all of the gains, for instance, from lower oil prices, and start putting up inflation again.
All right, Sumitra, do stay with us. Let's just get a different perspective from the UK and rope in Mariam Bemad. She's joining us now live from London. So, Mariam, despite the rand falling to a 13-year low against the US dollar, is this short term, especially with a US Fed rate hike around the corner?
Well, there's mixed views on how the rand will be affected in the coming months. You know, if we see a U.S. rate hike, it could put pressure on the U.S. dollar and push it down. But others say it could actually mean a major sell-off of EM currencies. Despite the low economic growth that we've been seeing in South Africa, the rand's performance against other major currencies has been a mixed bag. You know, in the past year, the euro has actually depreciated by almost 12% against the rand. In fact, many are actually warning that as much as it's important to reduce the rand's exposure to U.S. risk factors, it's also heavily dependent on economic growth and recovery in Europe, and with the continent being one of course, South Africa's largest trading partners.
Right. So where are investors worried about capital inflows to South Africa? I mean, what factors are at play here?
Well, we have to remember that inflation has declined, and the South African Reserve Bank has held its rate steady to deter that capital outflows we've been seeing. And analysts say that that's why in January the central bank held rates steady at 5.75% after raising it 25 basis points back in July. That's when policymakers could actually justify raising rates to cut off rising inflation we were seeing and very much deter the capital outflow. There are a lot of external factors now at play, like Europe's impact and, of course, U.S. monetary tightening against this sort of backdrop that we've seen of local issues like strike action in mining and manufacturing sectors. And investors say the government needs to avoid the contractions we saw last year, tackle the decline in consumer prices with both food and energy prices also very much accounting for the largest negative weights that we've been seeing, to try and boost domestic demand, which also helps sustain investment capital inflow.
Sumitra, what's the forecast for the rand in the short and long term?
Well, I suppose it's really hard to tell. That is the big question. Towards the end of last year, rand experts were predicting 12 to the dollar. We've gone way past that already. Some of the forecasts out in the last month are saying the next technical level for the rand would be 13 against the greenback. The currency is now reacting to international movements, and as long as the dollar strengthens, economists expect the rand to remain at these weak levels for some time.
Wow, some grim prospects there, Sumitra. Mariam, what about there? What are investors saying on your end?
Similar to what Sumitra was saying, economic growth in South Africa has remained quite sluggish, and last year analysts forecast the slowest pace in 5 years at about 4.1%. This year isn't really much better than that, with the government actually revising growth forecasts to about 2%. The planned spending cuts and personal income tax hikes all very much reducing consumer spending, which in turn is pressure on the rand. That, coupled with the country's balance of trade falling from the last 5 years, means that South Africa's export market has also been weaker, and that spells trouble for an economy dependent on exports as well.
All right, interesting conversation. Mariam Bemad live for us in London. Sumitra Naidu live in Johannesburg. Thank you both for joining us. Now let's stay in South Africa. The management at embattled government-owned South African Airways are considering staff cuts as part of a 90-day plan to save the airline. The acting CEO has had some success in steering the airline in the right direction. He saved around $50 million by closing non-profitable routes and has renegotiated contracts and saved another $8 million. But as Angelo Coppola reports, his attention has now turned to human capital. Staff were emailed on Friday explaining possible severance packages.
To date, the state flag carrier has received taxpayer bailout money to the tune of $1.3 billion, and it appears that staff costs make up the biggest expense item after jet fuel. So according to SAA, that's where they're looking next. And with 11,400 staff responsible for a fleet of just 60 aircraft, the staff ratio to airplanes is amongst the highest in the world.
We will look at two options, which are early retirement as well as voluntary severance packages. If that first phase will not yield the required or the necessary results, we will then look at an option of retrenchment, which is essentially an option of last resort.
But before it's even considered, according to South Africa's labour law, a Section 189 notice has to be issued to the unions, informing them of the staff cuts. SAA says that they could issue this notice as early as next week. On the other hand, unions have to protect their members and are naturally sceptical about whether job cuts will solve the problem.
Being a trade union, we always would encourage employers to promote economic growth first and foremost. So where they will answer their questions, we do not believe that will actually help them in their situation at the present.
It appears that it's not a physical headcount that SAA are after, but a monetary saving. And this implies cuts across the board from management downwards.
We have a sense of what the figure it is that we are looking for that will positively impact on our bottom line in terms of our operating costs.
However, it's not that cut and dried. If and when the cuts happen, there is no guarantee that it will be a once-off exercise.
It seems that SAA is on the right track. It's saving money in all the hard costs right at this moment. The problem now is that there's going to be a battle between unions and management about who gets retrenched if it gets to that stage. I'm Angelo Coppola for CCTV in the East Rand of Johannesburg.
The Zimbabwean government has started making monthly repayments to the International Monetary Fund as the country looks to clear its arrears and restore borrowing rights from the international moneylender. The IMF and the World Bank said Zimbabwe can only be considered for funding after it had cleared or shown commitment to clearing outstanding debt. Farai Mokutuya with more.
Zimbabwe is putting its money where its mouth is, literally. The government, which has just concluded the first term of an IMF staff-monitored program, has started making token repayments of $150,000 per month towards clearing a $124 million debt to the IMF as it continues its re-engagement with the international creditor community. The IMF has noted the progress on the ground.
All the quantitative targets and benchmark for the first review were achieved. And moreover, the authorities have stepped up their effort to engage with creditors, in particular by raising their payments to the World Bank and developing a roadmap for seeking eventually debt rescheduling under the Paris Club.
The monthly payments are a drop in the ocean when taken in the context of the country's $8.3 billion external debt. However, the IMF could be using the terms as a way to extract concessions elsewhere.
They are probably looking for something slightly more than that. Give us $150,000 per month, but let's get a couple of areas sorted out. You know, this is what they always do. They always look for all these small little things that need sorting out from time to time. There will be aspects of government, areas where they want to reform. There will be certain areas where they want certain commitments. They're extracting conditionalities, if you like.
Well, what Zimbabwean government officials will be hoping is that their commitment will be reciprocated by an unlocking of international funds, which will restart industries here, building up Zimbabwe's capacity to repay even more to its international money lenders.
Our intention is that by this time next year, we should be entering the new phase of clearing our arrears and opening the floodgates of new development financing.
Currently, the government spends more than 90% of its revenue on operational costs, leaving precious little for anything else, which is why fresh funding is so vital. Farai Mokutuya, CCTV, Harare, Zimbabwe.
Let's turn our attention to the markets now. And South African stocks sank for a second session in a row on Tuesday, pulled down once again by a global resources sell-off that saw platinum hit 5-year lows and iron ore plumb a record trough. The JSE Top 40 index was off 1.06% at 46,148, and the broader all-share index lost 1%. Coming up, Congo's biggest outdoor market receives a $12 million facelift. And preparations in top gear ahead of Egypt's two major economic conferences. You're watching Global Business. Welcome back. 4 years after the collapse of the Congo-Brazzaville's biggest outdoor market, traders returned to their stalls. Total Market had a $12 million facelift and was unveiled by President Denis Sassou Nguesso. The market was closed in 2011 after people were injured during a structural collapse.
Residents thronged the streets to witness the official reopening of the country's largest market. Total Market stalls collapsed in 2011, leaving scores of traders injured. The incident prompted the government to shut it down and upgrade it at a cost of $12 million. 4 years later, the market now boasts an administrative block, water supply, modern toilets, and a police station.
This market covers an area of 4,500 meters squared. It stands on a height of 21 meters. The tips split into 2 levels with a galvanized steel plate coronation of 3 glass pyramids.
Traders liked the market's new look, but few had concerns about the space allocated to them.
I am happy and proud of the work that was achieved here, but I think we are too many in a small market. The market is not going to be enough for all of us. We were each assigned a meter of space, and I think some will not find space.
Regular customers also complained about the increased prices of basic commodities.
Unfortunately, what you buy in the market is too expensive compared to the past. I just paid 100 francs for the chili you see. Before, you could get 4 or 5 for 50 francs only. Inflation is very high.
Modernization of the market will go ahead despite the complaints. The government has already commissioned a $24 million second phase expansion. It's expected to be completed in just under 3 years. Voldi Carolsa, CCTV.
Egypt is hosting a major economic conference at the resort town of Sharm el-Sheikh. It brings together international businesses to study the prospects of investing in the country. The government sees the economic conference, partly supported by Gulf allies, as playing a key role in turning around the economy battered by 4 years of turmoil. But as Yasser Hakim reports, there are still several challenges ahead.
Egyptian President Abdel Fattah el-Sisi says Egypt is ready for the economic conference and will not stop its development plans. He was responding to the latest terrorist attack in northern Sinai, close to the Gaza border, 3 days before the economic conference. Security is the biggest challenge to Egypt after the ouster of former President Mohamed Morsi in July 2013. The economy suffered from 4 years of instability. FDIs, tourism and foreign currency reserves dropped. And this led to a huge budget deficit and increase in unemployment and debt. The current government applied strict austerity measures, such as reducing subsidies on energy. This slowly pushed the economy back on track. The first quarter of 2015 saw a 5.6% growth and GDP increased by 15%. Positive news ahead of the long-awaited conference.
We are putting Egypt back on the international map as an attractive destination for investments. To succeed, though, we must apply new investment laws and regulations. We will try solve the problems of facing current investors and market our new projects. This is our plan.
Egypt is offering more than 70 projects to investors. It hopes to allure over $20 billion in the three-day event. Investors say it's achievable if the new law is put in place.
For investment here, the security, which I think the investment law has that. The other thing is how we can manage with one window, what we call it one window, that if I like to have a project here, I go only for the investment authority, only one, and she can get every approval from any other ministers. So that's a good thing we like to see.
In spite of the latest challenges, investors say there is huge potential in Egypt.
If you look to different countries, I think Egypt one of the countries which has a high return on the investment. The only thing we're looking for is to have the security. If we establish the security here in Egypt, either security as for the street, as security for investment coming from abroad, all we can have as a security is going to be a good for investor to come.
Yasser Hakim for CCTV, Cairo.
A look at commodity prices, and gold fell to a 3-month low on Tuesday due to the dollar's rise to its highest in nearly 12 years and renewed expectations of a immediate interest rate rise in the U.S. The metal took a hit after Friday's strong U.S. non-farm payrolls data boosted expectations that the Federal Reserve would begin increasing interest rates by the middle of the year. And still ahead, the new face of immigrants in Morocco. We look at an initiative that is giving them a chance in business.
Having lived in 4 different African countries and with a diverse background, I cherish the personal as well as professional experiences I've had across the continent. It's this understanding of the place I call home that drives me to tell stories about its people, its needs, present and future.
There's just so much happening in Africa in terms of the way forward and development. It only brings positivity.
My place at CCTV Africa is about creating awareness around the realities of a continent that is indeed complex, vibrant and has great potential.
Africa is my home. How it prospers, the challenges it faces, its people all matter to me because this is my future. I'm Famida Miller and I'm a reporter and anchor at CCTV Africa.
Every week, hundreds of migrants from sub-Saharan Africa put their lives on the line to head to Morocco in the hope of one day reaching Europe. Many don't make it, and some just end up staying in Morocco permanently. The European Union hopes to help those who land in Morocco by contributing money to expand a scheme which gives financial aid to migrants with legal status to set up their own businesses.
This is a corner of Casablanca's souk, which locals have nicknamed the Senegalese market. Migrants from across West Africa have set up shop here, selling food, cosmetics and other reminders from home. People officially recognized as refugees have also been able to apply for financial support and training to set up small businesses with the help of a Moroccan NGO, Amape.
At least I get my daily meal from here. I pay for my house, transport and everything all comes from here.
As well as financial support, Amape gives training in professional skills and selling in the Moroccan marketplace. Martin Dri began her beauty business in Morocco just by going to people's homes to do braids and hair weaves, using skills she picked up as a beautician in her native Côte d'Ivoire. Now she wants to add these skills to her tiny corner store.
Everything is difficult, but because it's something I've already done, well, yes, everyone is selling. I'm not the only one selling, but you need to know who to sell to and the clientele.
It is simple dreams like this that could be the future phase of immigration in Morocco. Amape discusses each in detail and conducts a feasibility study before additional funds or training are provided.
The Moroccan society is in the process of changing. It is becoming aware that they are foreign migrants, that they need to work, that they need to live with dignity, and that they need the same rights to work, to housing and to healthcare as Moroccans.
But despite treasured signs of progress, life undoubtedly remains extremely difficult for the migrant workers trying to make ends meet in Morocco. Like Fabian Manzingo, he has tried many jobs, and the latest is a small snack bar in a poor neighborhood of Rabat, which opened in February.
It's very, very difficult. We have to. There's no other way to do anything. What we always say back home is that life is a war. You have to fight.
But without an established customer base, he is worried that he will not make enough money to pay his cook her weekly wage. Migrant workers like Manzingo, who make the decision to stay and live in Morocco, however, face the challenges of making it in a poor country with 10% unemployment and low growth rate. For now, the AMAPE program is restricted to registered refugees and funded by the United Nations, but will soon be expanded with funding from the European Union to all migrants in Morocco with legal status. Celestine Carone, CCTV.
The world's first solely solar-powered flight, Solar Impulse 2, headed to India on Tuesday on the first major sea leg of its epic bid to become the first plane to fly around the world powered by the sun. Pilot Bertrand Piccard and fellow Swiss aviator Andre Buschberg plan to journey around the world with a total flight time of around 25 days spread over 5 months. The longest single leg will see one of them fly solo non-stop for 5 days and 5 nights across the Pacific from Nanjing, China to Hawaii, a distance of 8,500 kilometers. The SI-2 is powered by more than 17,000 solar cells built into wings that at 72 meters are longer than those of a Boeing 747 and approaching those of an Airbus A380 Super Jumbo. It will travel at 50 to 100 kilometers per hour, the slower speeds at night to prevent the batteries from draining too quickly. From India, the plane will head on to Myanmar, China, Hawaii and New York. From there, it will head on towards its starting point in Abu Dhabi through either Southern Europe or North Africa, depending on weather conditions. Right, so let's briefly look at the currencies now. The Kenya shilling held steady Tuesday as dollar demand eased, with traders expecting the currency to trade in a tight range, although it could come under pressure from a stronger dollar. Traders also said they were looking out for action from the central bank. Now, you may recall over the last week, the shilling has received support from regular liquidity mop-ups by the central bank. And on global business tomorrow, South African state-owned entity Eskom faces attack following remarks by its CEO last week that he was considering selling the Eskom finance company. We'll also be looking at Egypt's hopes to boost tourism pegged on the 8th Annual International Equestrian Festival. And that's it for this edition of Global Business. Do send your feedback to Global Business Africa at cctv.com. Visit our Facebook page, CCTV Africa. Also stay in touch with Global Business on Twitter using the handle at CCTV News Africa. I am Penina Karibe. Thanks for watching.